Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss about red flag in Chinese economy and what is the outlook for dollar rupee pair for the coming week. Let us start with the first part of the presentation. USA and China are the world's two biggest economy. They contribute 40% of the world's GDP. If any negative news comes in USA or China, it will have a negative repercussion across the globe. सबसे पहले इक्विटी मार्केट अक्रॉस द ग्लोब गिरता है, अदर एसेट क्लासेस विल फॉल डाउन एंड अ डिमांड फॉर डॉलर will come. There are some indicators which is showing that there is some problem with Chinese economy. Let me share it with you. The first one is Nasdaq Golden Dragon Chinese Index, which is an index representing 250 Chinese companies which are listed in USA. It shows the performance of those 250 companies. In last 6 months, that index has fallen down by 53% after US Securities Exchange Commission had given a new circular that Chinese company has to give detailed data as per US accounting standard. For detailed understanding of this issue, you can refer to our latest CNBC report, which I am sharing the link in the comment box. The second point is that one of the biggest Chinese real estate developer, Evergrande, is on the verge of default if Chinese government do not bill it out. And the negative repercussion of it can be clearly seen in Chinese junk bond, which has shoot up drastically in last 15 days. Similar situation happened in 15 September 2008 when US yields, junk bond yield have shoot up drastically when Lehman Brothers crisis happened. So there is a talk in the market that a default in one of the biggest real estate developer in China can lead to further repercussion to other part of the world. The third indication is falling iron ore prices. China जो है is the world largest consumer of iron ore, and in last 1 week iron ore prices have fallen by 20%. Similar thing happened in 2008 just before the crisis, where iron ore prices fallen by 22% in 1 week's time. So for the coming days, we at CR Forex will keep a close watch on two things. One is how is Chinese market, equity market is reacting, and second is USD CNH momentum. In last 2 trading days, USD CNH has depreciated from 6.43 level to 6.47 level. If it breaks a crucial resistance of 6.4950, it can definitely devalue towards 6.52 and 6.58. If Chinese currency is getting devalue, then rest of other Asian currencies will definitely devalue. Going back to the second part of the presentation, what is the outlook for dollar rupee pair for coming days? With stronger DXY and weaker Chinese yuan, we are expecting dollar rupee pair to take support at 73.30 to 73.40 levels, and dollar rupee pair should move towards 74.20 to 74.40 in coming days. For thin margin exporters, we will suggest, as they have got orders between 73.20 to 73.50, they should sell partially at 73.75 to 80 levels, and they can, for the remaining orders, they can keep a stop loss of 73.20. For thick margin exporters, when rupee was trading close to 73.20, we have advised them to pre-utilize their forward contract. Now we will suggest them not to sell aggressively at lower levels between 73.50. They should wait for 73.80 and 74.20 for further covers. Importers have two options. Either they can buy at the money call option on Monday morning. Because from last 1.5 months, what we have seen that there is some kind of inflow coming in, and dollar rupee pair generally appreciate because of the inflow. So either they can go and buy at the money call option, or simply they can keep a stop loss of 73.85 for further covers. If 73.85 is broken, they should simply go and buy for 45 to 50 days ka input. With this, I will end my today's presentation. जय हिंद, नमस्कार, फिर मिलेंगे.